A record number of home deals collapsed in July. 60,000 fell through because of high prices and certainly some of the uncertainty about the election. And perhaps just as important, July showed the lowest number of home sales ever. That was just that 1 month of July. Brian Wesbury with me this morning. Would the $25,000 tax credit that Harris proposes, would that help?
Yeah, if you get $25,000 to help with buying a house, certainly it will help you. The problem is that once that works its way through the system, it's just going to lift prices for everybody. So the impact would be temporary. But the second thing I'd remind everybody, we just heard a report. There's now talk of 3 interest rate cuts this year. So if you think the Fed rate cuts are going to bring mortgage rates down, why aren't you just going to put off and wait for the 3rd one or the 4th one? And if you think Vice President Harris is going to be the next president, why wouldn't you wait to get your $25,000 credit? And so what they're doing right now is actually going to slow the economy in the near term, not help it. Everybody thinks, cutting rates is somehow magically going to pop the economy. And I would argue that it's the opposite, that people are going to wait for the Fed to cut more and more and more.
Now, the latest survey from Freddie Mac shows a 30-year fixed-rate mortgage, 6.46%. Okay, well, I don't know why you're laughing, Brian. When will mortgage rates come down significantly? Back to, say, a 4% level. How long is that going to take?
Yeah, it's going to take a long time, Stuart. Here's the issue. The Federal Reserve has held, for the last 15 years, starting in 2008, the Fed separated interest rates from the money supply. And I know that seems kind of weird to talk about, but they used to be connected together. So what they did is they started printing lots of money during Jerome Powell's tenure. That's why we got inflation, but we were holding rates at 0. In fact, we held rates at 0 for 9 years out of those past 15. That's below the rate of inflation. Interest rates are supposed to be inflation +1, let's say, +1.5. Well, right now, inflation is 3%, 2 and 2.8%, +1, +2. You're getting to 3.5, 4.5, 5. We're not going back to 3% interest rates, mortgage rates. The reason we were there is because the Fed artificially held interest rates down at 0. I think they did that to make financing government more cheaper and more affordable. What they did is they sucked a lot of people into buying houses at under 3% mortgages, and we're not going back there unless inflation falls a lot more from where it is.
Okay, we'll take that. Thanks very much, Brian Wesbury. We'll see you again real soon. Thanks.